Louise Bedford here, your host of the Talking Trading podcast. This is how traders excel. You know, as a trader, that sometimes that simple little mindset issue that you're experiencing can reflect in your results. If you don't get your mind right, it can cripple your trading account. You are in for a special treat today. I'm going to talk to Saul Lokier, a true heavyweight in the industry. He is the CEO of the Fivers. The Fivers are a prop trading firm, and if you don't know about prop trading, this will be an absolute revelation for you. There is a way that you can get funded as a trader, where somebody else gives you money to trade. I'm going to show you how you can get funded and stay funded, but more importantly, regardless of the term of your investment. Saul is going to share some of the mindset tricks and hacks that he's been able to develop with his thousands and thousands of traders around the world. These are true insider secrets. You are going to want to hang off every word this man has to say. Saul Lokier, welcome to the show.
Hey, Louise. Glad to be here.
So the thing that everybody wants to know, Saul, is how can traders get funded to trade?
It's pretty simple, pretty straightforward. You go to the website, you select the program suits you the best, and you just need to trade according to the risk parameters of each one of the programs. So usually you have like a daily loss limitation and a maximum loss limitation and a profit target you need to achieve. And as long as you respect those parameters and you make it to the target, you will get funded.
And so prop trading firms are fairly new. It's something when I started trading, oh my gosh, 34 years ago, they did not have. Tell me
Correct.
more about prop trading, because this is what we're talking about in terms of being funded. What are prop trading firms and how do they work?
Okay. So, yeah, I agree. It's a relatively new industry. Our company, the Fivers, was created 2016. So, yeah, 8 years now. And, you know, it became very, very popular since COVID. So 2020, when people started, you know, looking for alternatives to make, you know, extra income from home. And, you know, then more companies started to be created and open it. And more people, you know, started joining the industry. Basically, we're looking for traders to solve some of their, you know, the common challenges. You know, when I started trading also almost 15 years ago, there were no prop trades. And when you felt ready, you want to start trading live and managing money and making money out of it, it was very challenging to access capital. And also when you were, you know, trading your own capital, the mindset and the psychology side of trading was very, very challenging, knowing that you're risking your own money. So I think the solution of the prop firms really covers those two sides or two challenges, the lack of capital access and the emotional side of trading, because now traders, they're not risking their own capital, they're risking their company's capital. So that, you know, brings a little bit of a relief on the emotional side. It is still there and it'll always be, but I think it helps with that.
But you won't just give anybody money to trade, will you?
Correct. Yeah, we're really looking for traders that are first speculative. They're not, you know, trying to game. You know, they're not trying to make just one trade and pass the evaluation. We really need to learn the traders so we can assess risks properly afterwards. So those who have a speculative strategy and they can show consistency when they're trading and executing the strategy will get funded.
So that relies on having a trading plan that trader can apply themselves to and execute again and again, doesn't it?
Absolutely. Yeah, because if we don't want to see someone who's trading certain way in the evaluation phase and then doing something differently once they're funded, because we assess risk according to what we see on the evaluation risk. So that's what we're looking for: the trading plan and the execution and the consistency.
And to get that funding, they have to jump through a few hoops, don't they? They have to show that they are substantial enough to be able to hold their own in the markets. What are some of the things that you're requiring from traders in terms of the tests that you assign? Give me a bit more of the lowdown with that.
Yeah, so we have a program, for example, that starts with a small account. It has a couple of stages, but each stage happens with more capital. So that, for example, allows traders to start managing larger evaluation, still demo accounts, still evaluation accounts, but larger capital. So we want to see traders managing proper lot size and lot size allocation and risk management with larger accounts. I agree with the trading plan. We offer our traders a virtual trading plan that they can download for free. And in some accounts, we require traders to always set a stop loss, for example.
Yeah.
That's the bread and butter of traders, right? You go learn and you learn about risk management and stop losses, and yet many traders don't use it, and it's a very hard habit to acquire. So we require those traders to use stop loss, for example. We have a very large risk team, and they go over the accounts, and they, sometimes there's some requirements for some traders. Okay, let's see you now trading with smaller risk, and let's see how you implement your strategy with smaller lot sizes. And then we help traders really to evolve into these larger accounts. In our programs, when traders prove themselves, they get access to more and more capital. And so you see traders managing $500,000, and it's all because they can show us they can manage risk properly. So we're pretty comfortable, giving them access to that capital.
Yeah, I love that you graduate this. Years ago, Sal, I was approached by this multi-millionaire. He'd sold his previous business, one of his many businesses, for 80 mil. And he said to me, trade for me. And I said, great, that sounds fantastic. He said, how much do you want? And I just went, 15 mil, just like that. And he said, sure. And bang, he handed it over. He literally handed it over. I had never at that stage traded with that amount before. So I love that you graduate these amounts up so that it's not just one big sticker shock for the trader. That is really good.
Otherwise you find yourself on this roller coaster of emotions when you see every pip being, every point in the market being thousands of dollars, and the P&L just fluctuating from thousands to thousands, and it's very challenging. So yeah, that's right.
Yeah, it sure is. My gosh, those early months with that gentleman were just trying to keep my cool, but acting like a duck. Everything's calm on the surface, but underneath I'm paddling. I do think there is a little bit of a difference between traders trading their own money and trading for somebody else, though. I'd love to hear your thoughts. What happens to a trader's mindset when they're trading somebody else's money?
Yeah, on the emotional side, I see traders less attached to the capital, and that makes them many times to be more aggressive and risk-free. They feel that they're not risking their own money, and you see them with behaviors, very aggressive behaviors. So you see them opening lot sizes that I don't think they would open on their own trading accounts. But but traders who prop trading learning curve, okay, then you see them very comfortable not trading their own money, very relaxed. They can trade from multiple locations in the world, and they just enjoy it from this lack of emotional pressure of not risking their own capital. So I think on the emotional side, once they go through this, okay, I want to make money quick and I want to hit the home run, they really understand the opportunity and the long-term opportunity, and they set the right expectations, and we seem just enjoying that lack of emotional pressure.
Yeah, I certainly found in relation to my own trading, after having traded that larger account, my own trading improved as well, because I wasn't quite used to seeing so many zeros after a particular order. Whereas with trading with the larger account, I got used to that. It helped me with that. And I think what everybody listening wants to know, because you are handling thousands of traders. You have seen literally thousands of traders' results. What are some of the insider secrets that help traders excel? What are the things that you can say to our traders listening that will help them in the markets?
It's pretty amazing because we see the accounts and we talk to other traders. Back in the days, I used to talk to these successful traders, those who are managing more than $500,000 accounts, and you see the same patterns across those traders. So first, they have their right expectations. They're really focused on the long term. They're not focusing on making some quick money now. They're following the rules, and they're following the systems, and the right expectations are there. And another point, very important, I've said it, in other forums, they really master what they do. You could they all trade differently. They all trade, some of them indicators, no indicators, support and resistance. They do different things, but they all master what they're doing. So they know exactly when to trade, when not to trade. If something is there in the market, so they don't trade, or they will adapt the risk differently. So you could ask them anything about their strategies, and they have a clear answer of what to do, when not to do. And I think that's crucial, because you don't see traders who are not just following one thing. They're not mastering a certain system, but they're jumping from strategy to strategy, or from system to system. You see them eventually failing. So the mastering is important. And another thing, which is it's not a hard rule, but most of them are not scalping. They're not getting into the market and out of the market very quickly. We see the commissions really affecting their performance of the short-term traders. Most of these high funded traders, they're trading more than just intraday trading. They're like swing trading, which is interesting.
So what you're saying is, as a trader, you need to run your own race, find the things that work for you that you can implement time and time again. Don't get distracted by the shiny object. There could be 5 trillion different systems out there, but really you may be capable of trading 3 of them. So get that sweet spot and enjoy using that sweet spot for your own purposes. And also, I'm hearing that discipline is the key as well. So even if you are short-term trading, be aware that sometimes holding for a little bit longer can actually bring about the greater returns. Are they some of the things that you have found?
Yeah. And another thing on the emotional part, we really see them handling those losses. We see them handling the trading loss and their self losses. The self-management is very, very important. They don't go into these bad habits of revenge trading or
sulking.
Yeah, like that. Okay, so they really know how to deal with losses, both in terms of the trade, taking the loss, and managing themselves after a loss.
Because there are the 2 types of psychology in the market. There is your own psychology, where you're having to control yourself, not only your emotions, but also your adherence to the system that you're following. But there's also the broad market psychology, which creates the charts that we trade from. So I often find that interesting, because one is almost a unique individual introspective quality of the person who's the trader, and the other is being able to read the craziness in the markets. What are the minds of all the other people doing to create that price action? I'd like to hear more about that psychology side. Sal, what are some of the psychological support systems and resources that you provide for your traders? How does that work?
It's not a specific solution for the psychology side of traders, but I think traders suffer a lot from blind spots, okay, from not knowing what's keeping them from succeeding. Okay, so you're not aware of what's keeping you from performing well in the markets, which is a kind of a blind spot. So we created all these kind of resources, basket of resources, to try to help them in that sense. Okay, we don't have like a tool or something to solve that for them, but we have a very large community where traders can go into conversations with other traders and experienced traders, and sometimes guests like psychologists and all of that, when they might have that aha moment of, okay, this is what was happening to me and I wasn't aware of that. So a very big community, and committed community, and supported community. We have a lot of resources like trading plans and indicators to help them with the risk management that might help them with the psychology side. We have a lot of guests. We have a podcast and interviews and webinars and workshops from psychologists that come, and all that content is available for them in their dashboards, in their client area. So we try to to give them this this support as much as we can.
And so listen to what Sal's saying here too, because you can't do this alone. You cannot trade alone and expect to continually get great results. There's a level of accountability that is required, and also the support and mentoring required to continue making it at the top of your game. Because once you're funded once, Sal, it doesn't mean you continue to fund them if their behavior and if their results don't perform. That's right, isn't it? You can get defunded. Yes.
We see the most committed traders in the community and these resources and really working on themselves. We see them succeeding more or succeeding longer, keeping the accounts for longer amount of times. So it is directly related one to another.
I was talking to a trader the other day who had their funding removed because they hadn't quite performed to that top level. Have you seen that with traders? And once they have become perhaps demotivated with the markets, maybe a little bit burnt out, maybe feeling that they can't quite do it because the results haven't been what they expected or what perhaps their firm expected, how can traders get themselves out of that funk?
That's a good question, and we don't have like a clear answer for that. It's something we try to support as much as we can, but it's not like it's not what we do, and we're not psychologists, and we're not, we're very experienced traders, and we try from our perspective to support them the best, and we're always approachable, and we're very open to traders to contact us and to reach out to us and to talk to us, and we try to really be for them. But as you mentioned, it's a really it's a serious personal challenge traders need to go. We have requests from traders or offers from ourselves to traders. Okay, let's put your account on pause. Okay, let's go back to the basics. Let's go back to rebuilding your confidence. Okay, trade smaller. Let's reduce your leverage temporarily to see your confidence build back. And once you feel ready, we will re-increase all your parameters, your leverage, all of that. But let's work together to find a solution for the challenges you're going through.
I like that, because you're providing a structure around this so that you're maximizing success. I think sometimes people underestimate the importance of that structure. I was talking to somebody who's been on the show, actually, Jeremy Newsom, and he says if he gets, and it's a certain number and a certain percentage of his equity, if he has that as a drawdown in a particular period of time, he stops trading so that he can give himself time to get back in sync, work out what did he do wrong. Maybe he just wasn't flowing with the market. You'd have something similar, wouldn't you? Like a maximum drawdown per day type of concept. Yes.
Yeah, we do.
Yeah. So I think for everybody listening, if you're managing your own account and this isn't enforced by somebody else, have a think about the things that you can do to say, I'm out of sync with the market. This isn't working. What are some of the measurements that you can apply? Certainly drawdown is a key. And whenever somebody is asking me about this, Sal, and I'd love your thoughts, I deal with a lot of people who have to answer to their spouse, not necessarily their trading firm, which of course a spouse is much scarier. So I say create an if-then statement. So if I draw down by, and I suggest to medium-term traders 25%, then I will stop entering new positions. I will allow my positions to run that are still in the market, and I will consult with a higher authority. So somebody to support me, somebody to shine a light into that blind spot that you mentioned. So I think that's what you are doing with your traders as well, by building in those structures.
Yeah, adding to what you're saying, Luis, I think the drawdowns are the best teachers. You get to know yourself the best once you're in drawdown, because when you're profit, life is easy, right? The challenge comes when you're in drawdown, and you need to adapt and get back to that. And of course, there's, it's a very large conversation, but you need to assess if it's something, in the market, in the performance or the strategy, or it's something that you're doing wrong. You're intervening, you're sabotaging your strategy by moving your stop losses and all of that. So we have, for example, a program when we have a limit called the daily pause. Okay, so if a trader hits within the same day a 3% drawdown, we pause his account for the day. Okay, we want to avoid him to growing that loss, and we want to avoid him to start going into revenge trading. And so we pause the account, and we say them, come fresh tomorrow. Tomorrow, leave another day to trade. So you can come back to the next day, you're fresh, you're calmed, and then you continue trading. So those kinds of tools and risk parameters are highly correlated with the psychology and our mindset and our performance in the market.
Absolutely. And one of the principles behind what you're saying is fresh start psychology. So the reason why we all love New Year's Eve is because we get a new year to start all over again. And so what you're saying to traders here with your actions is you're saying you can begin again. You can walk through that new door. You don't have to be a reflection of what has happened to you in the past. You can start all over again. And I love that. I think every trader needs to have that in their tool box to be able to really excel. I want to talk more about failures, because you're right. When we're flying high as a trader, generally that's not the area that we have difficulty with. Generally, not always. I remember, Sal, I had a series of trades, 9 of them, but who's counting, where I was just like some sort of trading god on BHP. It was just magic. I went long, I went short. It was just everything I touched turned to gold. And then all of a sudden, things didn't work out so well. And I had one loss, and then I had a really big loss where I moved my stop down. This is many years ago, but this was the one that taught me the lesson about don't move your stop down. That failure drummed it into my brain. Don't do that. So how would you encourage traders to learn from their failures so that they don't continue that behavior into the future?
Yeah, that's a good question, Luis, because when I was trading my own capital before prop firms era, I also raised capital from friends and from families. And I had that day that suddenly everything went sideways, and I have a huge loss, and you feel the pain, right? You feel
yes.
it in your body. It's just amazing how it's related and connected. And I said myself, that was the lesson. I don't want to go that way, never again. Okay, so that was the way I needed to learn. Okay, I'm not moving my losses. I'm not adding into losing positions once the setup is no longer valid. I don't want to feel that pain again. And traders trading only for prop firms, if they never had this experience of losing their own money and they don't feel that pain, they don't have that lesson learned. So they have to go, it's like when new kids, they start, driving, and they have GPS and they have Waze and there's apps. And then if you tell them, okay, drive without it, they're lost, right? So it's a very hard way to learn it. So I think it's an analogy to new traders that they don't only trading for prop firms. They don't get to learn the lesson the way we did. So they need to learn it in a different way, which is trying to figure out what's the right way to do that. But I think they're only risking a couple of dollars or not very large amounts to get into the evaluation stages. And they need to figure out a way to really tell them, okay, I'm not doing these bad habits again, because it's being bad for my performance. And I think the answer is, okay, what's the opportunity I have? Okay, if I really focus on the risk management and not going in, not losing more accounts, not losing more trades, what's the opportunity? And I think from the positive side of the opportunity, they can maybe build these right foundations.
I like that. I am very much relating to what you were saying about it hitting you. I remember with one trade when I was starting, it was in the first 3 years where I learned a lot about trading. I had a waste paper basket beside me. I did a trade, I closed it out, and I actually vomited. That's how visceral it became. So it
Yeah.
was his. So I still actually keep a waste paper basket beside me, even though I'm not using it for that purpose anymore. I think when we're talking about this type of gut hit, it can really impact your life in other areas. What advice do you give to traders who are trying to balance their personal life with trading? You know, what we're talking about is such a high performance endeavor. We need to be in peak physical shape. We need to be switched on emotionally as well as intellectually. There are so many aspects of this. It's like we're an Olympian, really. So, yeah. So, how do we balance our trading activities with our personal life and even with our relationships? I'd love to hear your thoughts.
It's funny because traders, most people, they don't want to do their jobs. They don't want to go to work. And traders, they do the opposite. They trade too much. Okay, you tell them don't trade, and they go out and start trading. So we really need to define, okay, what is my trading career or trading profession built of? Because it's not only opening the chart and executing trades. There's much more than that. There's the preparation and the learning curve of learning, and the trading plan, and the post trading session assessment, and there's much more than that. And even personal habits that you need to be on top in order to perform well in the market. You need to care about your body and your health and your sleep and hydration and all of that. That will directly impact your trading as well. So you need to be minded of that and understand that what you do out of the screens is as important as what you do in front of the screens. And of course, defining, okay, this is my trading session, this is the hours I trade. Like if you went for to the office or something like that, I trade from this time to this time, this is my trading session length, and I'm not going trading out of those hours. And when I'm not trading, I'm doing the rest of the things, family, kids, sports, friends, whatever it is, and being very, very disciplined not to trade when you shouldn't be trading.
Sal, I could just talk to you forever. I'm loving your insights. How can people get in touch with you, and do you have any parting words?
Of course, thanks for having me in the show, Luis. It's always fun to talk to you and having your insights. Just go to the website, thefivers.com, learn a little bit about us, what we do, how can we help your trading career. And whenever you feel ready, either reach out or just sign up for an account, and hope to have you on board.
Fabulous. Sal, happy trading in the markets. I hope they're treating you well, and I know that you are treating your trade as well. Yeah. So if you've been listening to this show, I do suggest that Sal has some incredible advice for you there. Check out his details. I'm popping them into the notes. And remember to like and to subscribe to this channel as well, because it means the world to us. Thanks so much, Sal.
Thank you, Luis.